Hey guys, tax attorney Joshua Sells here. Hey, really quickly for our daily tax update, wanted to talk a little bit about the downgrade of the United States by Fitch. Of course, you may be aware that the U.S.'s credit rating was downgraded over the night by just by 1 point from a AAA down to by one notch. And so just want to talk briefly about what that means in the world of tax. So in the short term, of course, we're going to see some volatility in the stock market. You can certainly expect to see a downward trend there. I believe that's just going to be short term. Could be possible to have some buying opportunity there. Of course, on the long term, you're always better off if you're going to be playing in the stock market or mutual funds or whatnot, to keeping your funds long term. So we definitely see that's going to rebound. But in the short term, we definitely see this impacting the rates. So of course the IRS, they announced their interest rate for back tax quarterly. It currently sits at 7%. So we do believe that that rate's going to increase in the short term. Additionally, one of the things that we want to caution people about with this downgrade by Fitch, you may see that your 401k or stocks or IRAs are going to decrease in value. Be very careful that you don't get spooked by all of this and sell, because we all know that that could create a taxable liability, in particular with your 401k. If you sell and then withdraw the funds because you may be spooked, you could be hit with an early withdrawal penalty if you're not otherwise eligible. So we do want to caution against that. Don't panic when something like this happens. That's the worst thing that you can do. But again, as far as the impact to in the short term, we do see the markets coming down as a result of this, a decrease in prices of the at the stock exchange. But also we do see an increase in interest rates, namely the IRS interest rate, which is pegged to the AFR plus 3% for back tax interest on payment plans. So that being said, there may be some planning opportunities there. It may be a good time to look at alternative options if you do have back tax, because we do expect those IRS interest rates to increase. So again, not a lot of news to report here. It looks like this may, I know the Treasury Department, they released a statement that they disagree with this and it was kind of arbitrary, and it does seem to be that way. Of course, we do know there are certainly some concerns with the amount of the U.S. debt that is out there, and just kind of the political climate in Washington at this time. But as far as what we need to do now, again, don't be pulling money out of retirement accounts. That's probably one of the worst things that you can do. Again, it may be an opportunity to purchase and go long on some stocks or mutual funds. But you definitely want to be looking at, number one, if you owe back tax, maybe now is a good time to kind of resolve that. And number two, if you're a small business individual or if you're self-employed, be looking at how this impacts your sales in the next couple of months. Remember, small businesses are making estimated tax payments because they don't have withholdings typically. And so this may cause a downward trend in sales as people get spooked. So if you're a small business or self-employed, you may need to make adjustments to your estimated tax. You don't want to be in a position where you're giving the government too much. Obviously, that would result in a refund next year. You'd be better off keeping your funds now instead of giving the government an interest-free loan. So be cognizant of that as we go into the next several months, particularly those small businesses, self-employed individuals. Keep an eye on your revenue and your profitability. If you do see a decrease over the next couple of months, which may happen as the general market kind of gets spooked, you may want to adjust your estimated tax accordingly. We'll keep an eye on this, but again, we just wanted to comment briefly on the recent U.S. credit rating downgrade. All right, thanks for watching. We'll talk to you tomorrow.